So yes, we'll quickly go into capital market. So there are mainly two types of markets. One is capital market, one is money market. So any instrument that is which is having maturity up to 1 year is called money market, and beyond 1 year is capital market. Capital market instruments are either perpetual in nature or they are having a higher maturity period over 1 year. Perpetual means never ending maturity. Normally shares are never having a perpetual maturity period. And there are also some bonds issued in which are perpetual in nature, but still as per the SEBI's law, any perpetual instrument in India is having a validity period of 20 years. Clear? So financial market is a market where फाइनेंशियल इंटरमीडियरीज टेक प्लेस. फाइनेंशियल मार्केट वो जगह है जहां पे फाइनेंशियल इंटरमीडिएशन होता है. ठीक है. फाइनेंशियल मार्केट में द नेचर ऑफ क्लेम माने वी हैव टू सेग्रीगेट द फाइनेंशियल मार्केट इन टू टाइप्स जनरली. बाय नेचर ऑफ क्लेम इट इज आइदर डेट मार्केट और इक्विटी मार्केट. व्हाट इज नेचर ऑफ क्लेम? सो व्हेन यू इशू ए बॉन्ड इंस्ट्रूमेंट or a debt instrument, you take a loan from public. Okay, so the claim over of the public or the bond holder on your company is like a lender and you become a borrower. So nature of claim differs. In case of equity market, what happens? The shareholder or the equity holder is the owner of the company. Is it clear? So if we segregate financial markets based on the nature of claim, then it will of two types: debt market, equity market. Bond और share में क्या difference है? What is the basic difference between a bond and share? If you have a share, you own a portion of the company. कंपनी का कुछ हिस्सा आपके हिस्से में आता है. You become a partial owner of the company. When you buy a bond from the corporate or from the government, you essentially give a loan to the government or to the company. Getting it or not? Is it clear to everyone? Then if we segregate, yes, if we segregate the maturity of claim, it is of money market and capital market. So I told you up to 1 year money market, beyond 1 year capital market. In this regard, we should start with money market, but I started with capital market because I made a very good presentation on the issuance of company. So I thought to start with capital market. Okay. So you will say me, if you buy a share, you can sell it after 5 minutes, after 5 months, after 1 year too. But for any period of time, you can hold a share. So why a share is not a money market instrument? As I am saying, any instrument with a maturity period of 1 year is known as a money market instrument. So why share is not a money market instrument? Because you buy and sell a share or you hold a share for 30 minutes, 30 days, 2 months, 3 months, like that, right? But the share is not matured in 30 days. It only changes the hand. The instrument remains the same. When is the maturity of share takes place? It never takes place unless the company is in a bad shape and it is liquidated. कंपनी जब वाइंड अप होता है तब जाके शेयर को लिक्विडेट किया जाता है. तब तक शेयर चलता रहेगा. It only changes the hand. It is not mature. Am I right? The time by timing of delivery. By timing of delivery, we will divide financial market in two ways: cash market and future market. Then by organizational structure, it is ETF, exchange traded market, or over the counter market. Okay, we need to private the chart. Okay, very good. Just a second. Yes, I made the chart private so that you can only, it will not disturb others. Okay, so timing of delivery, cash market means you are buying it and the delivery is taking place immediately. But in future market like derivatives, you buy an instrument for a future date. That is future market. Exchange traded market, instruments that are traded over exchange, NSE, BSE, gold exchange, MCX, etc. Over the counter market means OTC. That means without involvement of any online trading platform. If a deal takes place, that is called over the counter market. Like I told you, you can buy sovereign gold bonds online in various demat accounts, through various demat accounts. That is exchange traded market. But when you walk into a bank and tell them to give you a SGB, sovereign gold bond, and you buy it over the counter, okay, the teller hands over, you takes money from you and handed over the SGB bond to you. That is a over the counter market. I think till this point of time, everybody is clear. Everybody is clear. What is the debt market? Debt market is the bond market, Amisha Verma. It is the bond market. Corporates issue bond. That means they take loan. Why they take loan? Why they issue bond when they can take a loan from banks? It is a very good interview question. It is many a times asked during my stay. I know why is corporate issues bond and they don't take a loan, because sometimes they exceed the loan limit. The loan requires certain collateral, and corporates needs to diversify their source of funding, and at the same time sometimes the debt instruments or the borrowing from the public is cheaper than a commercial loan. So that's why corporates take bond, issue bonds. Okay. If you are a public sector banker and eligible for promotions this year, then you have landed at the right channel. In last 3 years, we have produced more than 5,000 results in bank promotions exams, starting from Reserve Bank of India to SBI, PNB to IDBI Bank, Punjab and Sindh Bank to Bank of Baroda, Indian Bank to Central Bank of India, in all public sector banks. We have a dedicated course for you, and higher the scale, greater the content is. So don't miss out this opportunity to grab your promotional aspirations this year. Visit our website, check out the links in description, or WhatsApp us at the given number to connect with us. Stay prepared and wish you success this year.